This is Len Haydachuk. Thank you for listening to our Financial Lens episode titled 2023 Mid-Year Assessment. The first half of 2023, and particularly the second quarter, has been marked by strong financial growth in the U.S. markets. The S&P 500 is up by over 8% in the second quarter. It's up over 24% since its low point in the fall, and only 3.5% off its all-time high. The Dow Jones also had a very strong first half. In the second quarter, it was up 3.25%, up 20% since its low point in the fall, and 7% off its all-time high. Nasdaq had a particularly strong performance, up almost 13% in the second quarter, up over 33% since its low point in the fall, and off 11% from its all-time high. The second quarter was marked by really three very important incidents, conditions, and really reaction by the government. The first thing we should talk about is the bank issues we had. We had a few banks be insolvent. The Federal Reserve stepped in and really assured the liquidity of the banks and restored confidence to that sector. It could have been a real big economic chaos and could have created a lot of problems if the government did not step in to do that. We also saw the Federal Reserve increase the rate twice in the second quarter. It really represented 10 straight meetings where there was an increase in the Federal Reserve rate from about 0% to about 5.25%. So we have had a continuing increase in the federal rate. However, in the last meeting, there was no increase. We'll talk a little bit about that in a second, but that was a change in the direction of the Federal Reserve, creating a pause in those rates. And also on the government level, legislation level, there was an increase in the federal debt ceiling. If that would have not happened, that would have been a real potential problem. So when we look at where we are going forward, there's and given an assessment of our circumstances, there are a few positive things to note, there are a few negative things to note, and there are a few waits to be seen things to note. On the positive note, of course, other than growth, we saw a real control of inflation. Inflation is 4% from May to May. It is the lowest inflation period over the last 2 years. And so that's really a positive indication of things in the future, because the Federal Reserve increased the rates specifically to try and curb inflation. And it looks like they're making very good progress in that. That's really a very good sign. On a negative standpoint, we see GDP slowing down. In the first quarter, the numbers that we have, the last quarter we have numbers for, GDP was up by 1.3%, compared to 2.6% in the fourth quarter of 2022. The GDP is really critical. The growth of the economy is what really drives all the markets, and so we see a little bit of a slowdown. How that will trend is really critical going forward. We wait to see what the results of that. We should find out the results of that in toward the end of July when that data comes out. From a standpoint of wait to be seen, there's a few things we should note. First of all, certainly we don't know what the interest rate environment will look like in the future. We don't know what the Federal Reserve will do in the future, but that waits to be seen. And also, we have to look at unemployment. Unemployment is at 3.7%, which is a very strong figure. However, one of the problems is that unemployment might be too low. What the Federal Reserve is trying to do is really to create a slowdown in the economy, create a little bit more of unemployment, because the high employment level is driving inflation. So the low unemployment is really a good number, but it's also a number that is really what's driving a lot of the Federal Reserve policy. And so it waits to be seen how the unemployment figures tie into inflation. Big question going forward is the recession possibility, what the economy is doing, and of course how the government responds to the inflation, how it responds to the need to maybe have future stimulus to push the economy forward, but could also create inflation. So when we look at the big downturn in the market last year, when we had the bear market, we're not quite out of that. We are hopeful, but we're not quite at a place where we can say, hey, we have a raging bull market, but we'll have to just wait to see how the economy continues to respond to the federal rate policies by the Federal Reserve. Thank you for listening to our Financial Lens episode titled 2023 Mid-Year Assessment.